Hi, my name is Meet Shah and from NMIMS Mumbai, and my company for equity research is Harley Davidson Motorcycles, which is one of the best motorcycle producers in the world, and they have a very strong consumer connect and brand loyalty. Disclaimer: the values we present in this document are my own and have no bearing or responsibility if they are wrong or mispresent Harley Davidson. My recommendation on the stock after the analysis is to sell the stock, which I will be explaining why in subsequent slides. First of all, looking at the best analysis, that is political, economic, social, and technological factors. Looking at the political factors, the environmental regulations, the laws, EPA, and HR legislation are very strong, which affects the company. Looking at the economic factors, the volatile commodity prices, the volatility of currency exchange rate, and pricing pressure, rising wages are affecting the business. Looking at the social factor, as aging couples with excessive income is a target market, a growth in this segment is beneficial for the company, and the increasing Asian market size is also beneficial for them. The changing technological innovations and fuel innovation and substitution effects the company's direction. Looking at the four sector model, we can see that in this model that only the bargaining power of supply is high, otherwise everything else is low, which is bad for the company. Good for the company. Short analysis, financial ratios, operating performance. Uh, HOG has the highest EBITDA margin, showing its revenues compared to its cost of operations is highest, and they have the highest net profit margin. Looking at the activity levels, HOG has the lowest asset turnover, which says that the sales it generates for each dollar invested in assets is low compared to competitors. Liquidity position. The current ratio of all companies are nearly similar, with HOG a close second, which signifies companies are moderately safe as they are approaching the safety limit of 2. Leverage. HOG is highly leveraged compared to other companies as it has a debt to equity ratio of higher than 1, which is not a good sign and says the company is stretching itself financially. Stock valuation. PE ratio for HOG is moderate compared to competitors, and PS ratio is highest for HOG. Stock performance year to date is 15.28%. Now, what we look at is at the valuation of the stock. What we have done in this is that we have estimated the growth potential of the subsequent years from its past performance, and then we have also analyzed what are the expense percentage contribution in the balance sheet of the company, and hence this was the result where where the subsequent categories contributed a specific percentage of expense to the revenue, and then we put in all those values and found the net income and earning before interest and taxes. And then for to get the RE value, we listed down the annual return of the stock for the last 5 years, as well as the bonds return for the last 5 years, which is the risk-free rate. And then using the CAPM formula, we found RE to be 14.93%. And when we put all this in terminal growth rate and terminal net income, we found that the target price of the stock is 33.45, which is less than the current market price of 49.51. Hence, I recommend a sell recommendation. Thank you.